Hello, everyone. Thanks for joining the Joint Custody podcast. I'm your host, Ben Duve. I'm the Global Head of Partnerships at GK8. I'm very glad to have an old, how do you call that, a person who went on that digital journey with me for many years from Deutsche, Sabih Behzad, with me. He's the Head of Digital Assets and Currency Transformation at Deutsche Bank. And maybe, Sabih, you say a few words about yourself as well.
Thank you, Ben. You already introduced me as old, so that's a tricky place to start.
Commonly old, right? Commonly old. Let's say commonly old.
I think the politically correct term is industry veteran. I think is how they refer to us.
Yes.
That's approved.
Totally before the Legends one, before you get the Legends awards, right?
So thank you, Ben. Yeah, so as you said, I'm at DB. I've been there 16 years, doing a variety of different things. My career was actually way back when in M&A, and before that, I actually started off in tech. My degree's a tech degree, so that's kind of where I started off. And I've been doing this digital assets role at DB now for about 3.5 years or so. And really, our mission is to try and figure out the topic of digital assets for Deutsche Bank more generally, work closely with the different business and product areas to develop our own capabilities, and really look to service that sector as well. So that's what we're doing, and really happy to join you in the conversation today.
Yes, thanks for being here. How did you get into digital assets, right? That's a natural follow-up question when you just what you just said. How did it happen that you are now the digital asset guys? I have to say you're a little famous now that you are on the main Deutsche Bank page with 120,000 subscribers and so on, commenting on digital assets for the industry, right?
Well, so I'd love to tell you a story about how it was a very complex career plan and how I mixed my technology background with my banking background. The reality actually is a little bit more straightforward. As I've said, I've done lots of different roles at DB, and in my last role, I was running the global KYC program for the bank. So I was essentially trying to resolve some of the legacy issues we were facing, and because that topic was such a controlled, focused topic, and my background was business and tech as well, as I said earlier, Ben. I actually built very strong relationships with those control functions and built out new control frameworks that we started using within the bank. And actually, the bank wanted someone that not only was going to try and drive to business outcomes, but actually was going to be very mindful of the control framework and the risk framework that we operate in. So that's really how I got it. I was kind of completing that program. My former boss said, "Hey, how would you like to deal with a completely different type of challenge on a new and emerging topic?" It just seemed too good to turn down. And here I am, and that's what I've been doing for the last few years.
You still feel like it? You're a few years in, right? I have to ask that follow-up question. You just set that up so perfectly as well.
Yeah, look, it's the truth is so there's some great things about this role: the learning, the opportunity to work with partners, speak to people like yourself, Ben, on a regular basis. I genuinely love learning and discovering new things about the space virtually every day. The news moves so quickly. So all of that is great, but yeah, it's not straightforward bringing about change, especially from within a traditional institution. As you've been there as well yourself. Yes. So doing that is one of the challenges, but I still enjoy it. I love it. I have great energy off the back of it.
Sounds great. You look like you have the great energy. I can say from me personally, I made that short step into crypto right now. It feels like it's a little faster moving than some of the other pieces, but maybe we talk a little bit more what Deutsche actually does, right? And I think to put in perspective how far you guys are already along the journey. So the question is, what's the strategic approach to blockchain and tokenization for Deutsche, right? Maybe also beyond custody, as you on the one hand are a GSIP, on the other you're an investment bank, right? So I think maybe to put that into perspective, but also what it means from different plays you're looking into, different opportunities you're exploring. I think it would be super interesting discussions, I think, for our listeners.
Yeah, happy to do that, Ben. So look, I think you've hinted at it. It's not an easy easy topic to work on with kind of a traditional institution. Obviously, such a large global bank. Again, I'm not sure to what extent people understand Deutsche Bank, but very briefly, we've got a very large private and retail bank. Mostly, predominantly active in Europe, and then we've got a very large corporate bank and a very large investment bank. So those are the three chunks of Deutsche Bank. So working across those three areas can be pretty complex. I think, our starting position, Ben, really is we're signed up to that mantra that says this is about the tokenization of everything. Ultimately, we believe everything will be tokenized. I think the only debate really is, what's the time horizon on that? And you and I have debated that before, right? We've
I
talked
can
about, is it a
subscribe to that
3-year thing? Is it a
100%.
5-year thing? Is it a 15? Is it a 20? Will these veterans move on and new veterans come in to have this discussion in 20 years' time? I think that's a debate that can be had. Although I'd say I see a lot of signs of acceleration. So I think it'll take a lot less time than we've probably been thinking. But that's kind of our starting position. We've got this belief that things will be tokenized over time. So if you accept that, then really, then it's really only a question of understanding how you want to play that space. And I think, again, coming back into the context of a GSIB, I think it's fair to say in our industry, maybe the politically correct term is there've been some misfired projects or projects that haven't quite gone the way they should have. And so, obviously everyone's got a heightened response to making sure that things we engage in are the right things and that they lead to some tangible outcome. And because of that, we've by and large got 3 or 4 kind of steps from a strategic perspective. So the first really has been about just increasing the knowledge about blockchain, about DLT, and trying to really create some education internally. That's kind of been the first phase. We've done a lot of that, but to be perfectly honest, it's an ongoing thing. It never really ends, especially if you think about Deutsche Bank as an organization has more than 80,000 people. It's a large space. So that education piece is very important. Then the second piece really is about building our own products and services. And, for us, custody is really fundamental, Ben, because through custody, you actually build all of the foundational capabilities you're going to need in order to play in some of the areas that I'm going to talk about in just a second. So that's where we started first. We wanted to build out the custody capability and use that as the beachhead or the launchhead to then try and do other things. So that's that. And then the third area has been really speaking and engaging with clients because, ultimately, it shouldn't really be about sitting in a darkened room and trying to come up with the best technological solution. Really, this is about servicing clients. And so seeking out those clients that want to partner and develop and cooperate in this place has been really, really important. And so we've been doing that. And of course, also with vendors, we've selectively worked with some vendors and we'll no doubt work with more vendors over time. And then finally, it's about extending all of that, right? It sounds easy, but doing all of those things, part of those things are done in parallel, part of those things are being done sequentially, but it's then about extending all of that and trying to operate at that pace that keeps up with the pace of the industry. I think that's what we've been trying to do.
Sounds super interesting. I mean, as a former head of custody, I can fully subscribe that custody is at the core of everything. And being now a custody solution provider as well. So I think that's a nice one. For me, the interesting bit, what you just described is in that field of, in the future, there could be a fully tokenized capital markets, right? And then we see that the ECB does the Appia one. I think the US might go a little bit more in that DTC versus also some sort of more open blockchain environment, whatever that potentially means. Already having decided on the building block of the custody, what are the pieces of the puzzle that you can do now? I mean, I don't want to ask you for a time frame because I never do that myself anymore. You're always wrong and everything is recorded. So that's always a bad one. When do you think mainstream adoption? And it's like saying Bitcoin goes to 1 million and then you just delay the years, right? But anyways, so the question is, what are the use cases you look at now that build those building blocks on top of your custody bit to be ready for that tokenized future? Maybe from what you need technologically, but also from what you see from client demand where you can actually make money, right? Because ultimately you want to pay for the infrastructure you're building.
Yeah, I think that's a good question, but I think there's probably a few things I would say. I mean, just touching on the custody point, the part of the reason I mentioned it's important is not just because it gives you that capability, around custodying, around storage of private keys, but actually what it also does is it forces, from an organization perspective, for you to build your control framework, for example, right? You need to be able to monitor those transactions in some way. So that makes you think about, okay, what is that transaction monitoring capability I need? It makes you start to build some of the processes that you need to sit around that. So that's why I kind of see custody as foundational, not just because of the actual custody business, but because of all these secondary capabilities that it forces you to build that you're going to need if you want to try and do any of the other use cases. So that's partly the answer to that. You were talking about the other use case areas. So I think, and I think part of the challenge in the industry has been we've had many different use cases on many different platforms using many different assets. And when you have so many, it becomes quite difficult because really one of the challenges in this space is to get critical mass on a particular area. It's probably true that by yourself for virtually any of the topics in the space, you will never get scale unless you've got enough participants, enough partners also operating in that same space. So that's been part of the challenge. I think that's part of the reason why digital assets haven't perhaps have exploded quite as quickly as some of us thought it might, right? It's taken a little bit longer, but sometimes innovation takes a little time to play out in this way. I think for me, there's kind of 4 buckets of things that are interesting right now. And by, it doesn't necessarily mean DB will play in all of these areas, but I think there's 4 things that I at least observe right now that are topics. So firstly, there's kind of the crypto monolith. That's real. Crypto, as you said, has been surging in price. And there's a whole bunch of services and offerings around crypto. The things that I kind of see right now, obviously custody being a very obvious one, we've talked about that already, so I won't talk about that again. But the other topic that I think is coming up more and more now, because you've got a prevalence of crypto in the market, is things like crypto-backed lending, right? These things are not completely new, but the fact the topics coming up with more frequency, I think, is quite interesting. So that, I think, is a monolith by itself, crypto. The second area that I think you've seen has been around the tokenization of money, right? So within that, really, whether that's stable coins or tokenized deposits, those topics have become very front and center. Obviously, lots of stuff being written about stable coins virtually every second of every day, and especially a lot of activity that we're seeing in the US off the back of some of the momentum we're seeing through the administration there in kind of promoting the usage of stablecoins in essence. So I think that is a second pillar that's very interesting and is very real. The third pillar is around tokenization of securities. So we ourselves have, for example, tokenized some bonds for NRW Bank and KfW Bank, both in Germany. Those were fairly large issuances that we were involved in. And really that's been about helping our clients create those issuances and really understand the benefits of using blockchain technology. So I see that as a third pillar, the securities piece. And then the fourth piece, which I think is to some extent a subset, but it's really finding its legs by itself, is around tokenized collateral, right? That's taken off as a big topic as well. And whether it's discussions as using tokenized money market funds as collateral or using other forms of securities collateral, I think is very interesting. And it's interesting because you were talking earlier about Ben around revenue. It's absolutely very important that these use cases that now get driven are not just science experiments. They actually lead to either real revenue or a cost save for the bank. So I think those 4 areas have elements of those to a greater or lesser degree, and that's why they're areas of interest. And I think across all of those areas, we are absolutely spending time thinking about how to develop capabilities.
Well, that sounds like an interesting. Should we double click on the stable? I mean, the hot topic right now is the stable. If I were have to prioritize, I think the stable coin and the collateral one are the more instant use cases, while the securities tokenization might take, as you need to gather a whole tribe around like the place or the liquidity or the liquidity pool, right? I think it's a little more tricky to make it economically viable. So if I look at the ranking, there is, and correct me if I'm wrong, the stable coin as well as the collateral one are the more immediate opportunities, while the securitization and just tokenization of assets is more tricky because it's buy and holds, those kind of assets, because you don't have the marketplaces yet that provide the same level and depth of liquidity. And look, I hope in Europe the central bank will help with APIA and naturally, and in other regions we see the DTCC going for it. But this is a longer journey. If we focus, double click on stable coins and on the collateral, but what's your view there from your personal, but also the DB perspective? What are you guys looking at? How do you see that play out in the more short term, right? Because I think those are super important topics, and maybe especially the collateral one, not everybody has heard of yet.
Yeah, for sure. So I think on the stablecoin topic, so firstly, the stablecoins to some extent aren't really new, but they've taken center stage over the last few months, right? And it's partly, as I said, come down to that regulatory acceptance of them, especially in terms of what's being driven out of the US. I think one of the challenges had been that there were a number of them, not all of them, but some of them at least had been operating in a gray zone, and therefore, especially where you've got more established clients, obviously an unwillingness to operate in a space that is gray, and banks weren't involved as well. And because of that, I think it created this unvirtuous circle. That obviously has shifted a lot in the last few months, and I think that's why it's become much more front and center as a topic. I absolutely do think they're a very interesting, interesting way of moving money. I think really the big use case is about cross-border movement of money. That's where they really come into their own. You can argue that a lot of domestic payment systems actually, are near instantaneous, and in some cases 24/7 already. So domestically, probably limited value, some value, maybe there's some use cases to be thought through, but really it's cross-border where they come into their own, and particularly in countries where holding dollars or euros or, one of the G7 type currencies becomes quite important. So, we absolutely do think they're interesting. And that's why we are spending time thinking about them. As you know, Ben, from not directly from a Deutsche Bank perspective, but our asset management arm, DWS, which is a majority-owned entity by Deutsche Bank, but it is a standalone company, in partnership with Galaxy and Flow Traders, has launched a entity called All Unity. And All Unity obtained a MiCA license recently, so they will be able to start issuing their All Unity stablecoin, and obviously, expect to grow that, grow that market and participate. So I guess Deutsche Bank good.
Yeah,
I guess
as the user tech, right? So I think thanks for bringing that up. I couldn't have said it up better, but sorry, I disrupted.
Yeah, no, I was saying we're already, both of us are already, I guess, involved in that in a, in perhaps in a bit more arm's length way, but we are involved in that in initiative from that perspective. So and we're still thinking through, what does it, where could Deutsche Bank play a more direct role in that. So there's still a lot of thinking to be done, a lot of analysis to be done, but it's very interesting. And obviously, as you know, Ben, we've got a very large correspondent banking business, which is really all about moving money internationally, right, across different FIs. So it's an area that obviously merits spending time on and understanding. So I think you're absolutely right. The stable coins and deposit tokens, all fall into that bucket, and we're spending time thinking about those things. On the collateral piece, yeah, for those that perhaps don't get to spend so much time with that as a topic, moving collateral or providing collateral is not a straightforward process in today's TradFi markets. Usually you have to post the collateral up front. It can take a bit of time for that collateral to settle. It might be T+2 process. And in essence, that's time where you can't make use of something that you have as an asset because it essentially is in transit to someone else. It's a bit like sending a letter through the post, and you put your money in the post, but you can't quite use it or access it until it arrives at the other end. So there's a little bit like that.
And that costs money, right? That
So the ability to
sending costs money, right? Because if you don't have access to funds, it actually economically is debt for you.
Exactly, and it's expensive to do. And it's also subject to fail sometimes. So you think you send something, you didn't actually send the thing, you're not able to match it at the other end. So these processes can be quite costly. And given overnight rates, if you have to park these funds or park these assets overnight, that costs you as well. And your ability to recycle these assets is also somewhat limited. So really the kind of main innovation or main discussion we've seen in the market has been through these tokenized money market funds, where asset managers have taken typically a money market fund that they might have, put a tokenized wrapper around it, And then in essence, what you have is underlying, you've got securities. These are typically HQLAs, very similar to how a stablecoin might work in terms of backing, being backed by HQLAs. But because it's a money market fund, it can earn interest, which a stablecoin cannot. So as a holder of that token, you're in essence earning that money. You can post it as collateral, and therefore you're able to get the efficiency of that. And it also creates the opportunity to have an intraday market, which today doesn't exist with many of these assets, because you only need to post the collateral for the period of time that you need to, then you get it back and you can go off and deploy it elsewhere. So it actually brings a whole bunch of efficiency to capital markets. So it's an area we're looking at with great interest. Again, there's still challenges in that space. It's still a developing area. There's topics around the eligibility of collateral, right?
That's
How
what
it
I
can be
wanted to ask.
recognized.
It's the money market fund. It's a little tricky, right? I mean, everybody talks about it, but actually it's not, at least in the US, not eligible collateral right now.
We've got a number of these topics that, and as I was saying at the start of this discussion, Ben, I think people expected everything to have moved much, much faster, or many people that have been in this industry expected pace to happen much faster. And it's not technology that is actually the main barrier here, because people, I think, often think about, oh, this is all blockchain and maybe the technology doesn't work, or it's a bit slow. There's very little that doesn't work in blockchain technology. It works exactly how it's meant to. And it's got a super impressive uptime as a technology as well, almost unrivaled. The challenges you come across are mostly legal and regulatory, because you're finding novel ways of doing traditional things. And as you come across those novel ways, you need to engage regulatory authorities, lawyers, other bodies as well, to try and essentially have those rules or regulations amended to take into account this new way of working. And you won't always know what those things are until you try and do something, and then you hit a wall, and then you try and resolve it. So you're absolutely right. That's one of the challenges. Eligibility of collateral and acceptance of that is an important piece.
I always see that banking also has the challenge that you gather around watering holes, right? And that's liquidity. And it's very difficult to lure people away. But if those watering holes, or whatever that is, does not move into the technology and push the technology, why would you buy an asset that's less liquid or has regulatory or legal pitfalls, right? That works for certain niches, but I think what you and I here talk about is mass adoption and significant change of underlying capital market infrastructure, right? And that's why I like what the ECB does. I did contribute a bit to it, right? So to try to help the industry also from a regulatory side to move into the right direction, but I think that's it's a longer time frame, right? So the collateral one is an interesting one, because there's a lot of revenue to be made, right? I mean, what you just mentioned, all of these little topics, overnight, intraday liquidity, right? Settlement fails, all of that is money, right? Or costs money, economic costs associated with it. So there's a business case already today, and the group of people to use it is much, much smaller, right? I mean, it's not everybody connected to one central depository, for example, but it's everybody connected to one or two major places, and only the really large players are involved. So I think that's maybe a large opportunity. Like, we've talked now about all these different topics, super interesting. What's your personal lesson, right? As a person working in digital assets over the last years, but naturally also as an institution from Deutsche Bank on these different use cases, when things haven't worked and did work. Did you engage in some you might have had doubts in the beginning? You did, how it works, right? I had a few ones where I said, oh, I was super excited. I remember I held my first speech on crypto, on how to do corporate actions on using, make it more efficient on the blockchain, because all these problems existing around it. Now I would say, hey, corporate action is just a function of the blockchain. That's not, but you got really excited, invest time. So what's your personal lessons around the topic, maybe, but also point to some as an institution as well?
Yeah, it's a good question. I think, thinking about that, I think when I first got in to it, and this is going back now a few years, we've talked about the religious fervor around this topic, Ben, which actually I think for those that are coming from a crypto native background, it was probably quite natural. I think for those of us that came from a TradFi background, it was actually a little bit dangerous, right? We were just a little bit worried that blockchain was being sold as a solution to each and every problem. It was going to bring about world peace and resolve everything, right? And I think, one of the big things that probably happened over the last few years, and I think maybe it's natural to some extent, but I think the gap between the TradFi world and the crypto native world has closed. And I think, whilst we're not perhaps quite on exactly the same level, but I think we're much more talking the same language and much more seeing the world in a similar way than we were perhaps seeing before, which I think is actually really healthy and really, really important. So that for me, I think has been one important transformation. And look, part of that is born out of the fact that, and you'll know this, Ben, as well, right? When you talk to clients, most clients don't really care about blockchain technology. Now, that might feel like what I've said is absolute sacrilege, right? To people that might even be listening to this, because there might be some people who, absolutely live and die and breathe blockchain technology. But the reality is clients only care about solutions. They don't really care about the technology. How you've connected the wires beneath the surface, right? Nobody cares about that. They just want to turn the switch and it works efficiently, right? So that for me, I think has probably been, one of the other big learnings. How we explain and package things up is very, very important. It has to be very solution orientated, not technology orientated. For us that are interested, yes, of course, it should be technology orientated. But for those end users and clients, it needs to be packaged up and obfuscated in the right sort of way. So I think that's one piece. I think the second piece has been, two topics I used to hear a lot when I got started. It's all a regulatory problem, and regulators aren't helpful. That was one topic I would often hear. And the other topic I would often hear is this is all an interoperability problem, right? So those are two things repeatedly I've heard over the years. And I kind of feel that they were convenient ways to deflect from the lack of progress, if I'm being honest, right?
Yes.
The reality was that, yes, there was a bit of inertia, I think, from the regulatory perspective when we first started out. But actually, you'd be very surprised, and I know, Ben, you've been part of those discussions with regulators as well. Regulators have actually really upskilled themselves, and their understanding of the space is far more sophisticated than people believe. So I think to simply throw it in the regulator's lap is a mistake. Yes, there's probably a opportunity to move faster from a regulatory perspective. I think that's correct. But of course, you have to remember regulators need to balance innovation with the safe and secure operation of financial markets and ensuring financial stability. So those two things are not always easy. So for me, I think that second learning has been we've over-egged those problems in regulation. And now, in any case, nobody should have any complaints because they seem to be moving at 1,000,000 miles an hour. So I think that's gone away. On the interoperability thing, I would simply say that I think a lot of discussion used to be about, this chain won't talk to this chain, and then, I've got this type of token won't talk to that token. And that's where we spend a lot of time on interoperability. Actually, for the TradFi firms, the bigger interoperability question is not that one, but it's actually interoperability with legacy tech. Because, of course, none of us banks typically stand up a completely fresh entity and say, let's go and do digital assets and that thing, and then the mothership carries on doing what it does. We're trying to do these things within the institutions we're in. And so interoperability should not be underestimated between legacy tech and blockchain. So I think that's probably the other learning. And then look, the final thing, I would say is there's kind of there's a palpable acceleration, right? And, I feel excited about this space every day, but I feel even more I feel even more excited, I think, recently, because I can see the acceleration that's happening in this space. And it's coming down to the fact that, as we said earlier, we're getting clearer regulation. Jurisdictions are globally moving into the space much faster. We can see different parts of the ecosystem coming together. So it's not just banks and not just crypto native. We see the regulators are there, the CSDs are in this space. A whole variety of ecosystem players, fintechs, a whole variety of ecosystem players are moving together. So I think that's creating a lot of excitement. And then, just the industry pressure that's now there, Ben, to reduce cost and increase innovation. And we've actually got to say that's partly down to our distant cousin, AI, that is helping to drive some of that, right? So, it's helping people rethink what is the value chain of activity, where can I get the most value? And I think there's a really interesting interplay between blockchain technology and AI that is probably underexplored at this moment in time.
I think super interesting. I think you being in one of the key GSIBs around the world in such a and such an important function, excited about the opportunities around blockchain, DLT, crypto, and so on. I think it sends a strong signal. So I think also from an industry perspective, always thank you for sharing that excitement, but also thank you for sharing here on the podcast. We can do a whole other one. Is AI a cost play and crypto tokenization a revenue opportunity? I think there's a whole other, I always like to push that as a blockchain person, to push that agenda a little bit, but maybe that's a whole other podcast. I think thank you for being here. Thank you for being on the podcast. Hope to invite you back soon, and then stay as positive. It's great for all of us.
Thank you so much for having me, Ben. Real pleasure talking to you today.
Thank you.